A very warm welcome to ACCA Think Ahead, our series of video recordings with special guests. Today I'm delighted to welcome one of my colleagues from ACCA's head office. Is Chas Roy Chowdhury, Head of Global Taxation for ACCA. Welcome to Islamabad, Chas.
Thanks, sir.
And Chas is a very frequent visitor to Pakistan. He's often delivered talks at the Federal Bureau of Revenue and with members and other stakeholders here in Pakistan. So Chas's visit this time is in connection with a report that we've just recently launched, and we've done it in partnership with Ernst & Young. It's called Indirect Taxes, Current Trends Across South Asia and the UAE. This report is available online, so I'm sure by the end of this conversation we'll point you in the right direction. Chas, just to ask a few questions around the report. We've covered Pakistan, we've covered Bangladesh, India, Sri Lanka and the UAE. You and I were in UAE last week, and we saw that the new rate that they're bringing into UAEs is kept very low at 5%. They're envisaging. The kickoff date for the legislation to kick in is 1st of January 2018. One question that always comes to our mind here when in South Asia, especially Pakistan, where the rate can be from anywhere 17% to 19%. Why are the countries in South Asia keeping their sales tax rates and their VAT rates at such a high level when countries like the UAE, where the per capita income is $40,000, they're keeping it at 5%. What's the motive behind those rates?
I think the main reason why the UAE is starting with such a low rate of VAT is because they're starting with a clean sheet of paper. The other jurisdictions in the region have already got a developed VAT system, and therefore they've got rates which are much higher. The UAE only intends to raise 2% of GDP as tax, which is a lot less than other jurisdictions which are looking at VAT. The indirect tax is raising 2/3 in Pakistan, for example, nearly 50% in Pakistan, 2/3 in India, 2/3 in Sri Lanka. So it's a much higher percentage in other jurisdictions than the UAE, hence why the rates are high, and it's a much more developed system in the other jurisdictions.
Right. Well, one of the connected areas that was raised during the event we had in Lahore yesterday was around what are taxpayers getting in return for the VAT. So if we are paying a relatively high percentage in VAT, some of the examples you quoted was around the welfare state system and what taxpayers get in return. So can you give us a few examples of the higher VAT jurisdictions, but also in terms of the percentage of GDP, what taxpayers are getting in return for that contribution?
Well, that's right. In terms of the UK, we have tax at about 37% of GDP. For that, we get health service, which is part of the taxation system, education. We get a lot more included. In some of the Scandinavian countries, we're looking at tax to GDP of around 60%, and they accept that as being a part of their social contract, if you like, and VAT in those locations in Northern Europe can be as high as 25%. In the UK, it's 20%. And in the US, they don't have VAT, but they have sales tax, and they tax below 30% of GDP, but they don't have free health service or free education. That has to be paid for separately.
Sure. So in other words, the low tax to GDP ratio we have in Pakistan at the moment, floating at around 12%, it's never really increased to more than this. That's also reflective of how the state is providing in terms of its welfare support to citizens as well, is it?
Well, that's right, because again, in Northern European countries, well, across Europe in general, there's a social security net if you lose your job, or if you need additional income to support to bring you up to a certain living standard, which doesn't exist in other jurisdictions like Pakistan. So that, again, is a part of the reason why you pay tax in these other jurisdictions.
So one of the other things that we also revealed in the report are the levels of registration thresholds across South Asia. And again, across many of the countries in South Asia, there seems to be almost a parity in setting the threshold levels very low in order to capture more businesses. But again, in the UAE, we're anticipating the threshold being charged at $1 million compared to other countries which are around between $12,000 to $20,000 per annum. What is your thinking behind why the the thresholds are set at a low level in South Asian countries, whereas the emerging economies or the new developing economies like the UAE are setting very high threshold levels?
I think the reason behind that is really around the per capita income. So you look at per capita income in the UAE, as you said, towards $40,000. In the South Asian countries, they're much, much lower, like a tenth or even less than a tenth of the UAE level. So businesses, small businesses are, if you like, their turnover thresholds are much lower. So that's probably the main driver. And also, I think what will happen in the UAE is that they're just starting out now with a high threshold, and when we're there, they're talking about possibility that threshold may even be $100,000. So we just need to see what it actually ends up being. So it may be high to start with, but I suspect it will actually come down in the UAE because it is extremely high.
Well, one of the important areas that is mentioned in the reports is the increasing use of technology to help both the collecting authority as well as the taxpayer. Now, in the event in Lahore, we heard from the member operations of the Punjab Revenue Authority that increasingly they're using real-time monitoring of sales at the restaurants in Lahore. How do you think technology is going to play a greater role in simplifying the collection of VAT? And can you give us some examples of technology which are being used in some of the developing nations?
Yeah, I think it is going to. For example, in Pakistan, we already have a fully electronic system. Whether that actually works, the functionality is effective or not, I'm not entirely sure, because what we heard in Lahore is that sometimes the systems at the tax authority end breaks down, and I guess at peak times there are always going to be problems, because we have that same situation in the UK, whereas at peak times, peak filing times, we have breakdowns. And I think in terms of other things which are being proposed in the UK, we're having the possibility of something called move to digital, which is going to require on direct tax, which is going to require up to 5 returns a year. So these are all things which are developing in other jurisdictions.
So thresholds, we've talked a little bit about the income levels and the per capita income as a determination of the thresholds. The other thing is around penalties. Again, different jurisdictions have different levels of penalties. But generally speaking, how should the authorities actually manage penalties in order to encourage greater registrations and filings? In your opinion, what's the best mechanism to use penalties?
Well, as you say, penalties should really be there about compliance. It should be about making people get the tax they pay right, the correct amount of tax being paid across. They shouldn't be punitive, they shouldn't be about retribution, they should be about just making sure that the person is actually putting the filing in around that they're claiming the right amount of input tax but back in the case of VAT or other taxes, and that what the penalty is about is that it actually helps both sides, both the tax authority and the taxpayer, get it right. So there should be some sort of supplement which is equivalent to a penalty on the other side. And I think what ought to happen is that penalties need to be rarely used. There might be interest charges where the right amount of tax hasn't been paid across in time, so there's an interest charge which currently wouldn't be very high, and that would go both ways for taxpayer and tax authority. But penalties are a real cost which quite often aren't deductible for tax purposes, so we should be using them on a very limited basis, only in exceptional cases where there's real evasion or there's real negligence on the part of the taxpayer.
So where, for example, we talk about not from the point of view of delays by the taxpayer, but rather from the authorities to make the refund back to the taxpayer, in that case as well, the authorities ought to be compensating the taxpayer for delayed refund. How's that best practiced?
Well, in the UK, if you're not paid back in time, then there's usually an interest supplement as well as an additional supplement, which is like a penalty on the tax authority, which, okay, it's not codified necessarily, but there will be some sort of compensation sent back to the taxpayer.
Right. The term trust deficit has been used quite often during our events here between the taxpayer and the authorities. There's a genuine lack of trust with the authorities. They're trying to overcome that. We heard yesterday from the member operations of the Punjab Revenue Authority that they're about to celebrate a tax day, and they're using incentives such as giving away cars and mobile phones. What's your opinion of such schemes to break down the barriers between the authorities and the taxpayer?
I think what really would break down the barrier most would probably be if they showed that they can process refunds on time, because we're hearing that refunds are very slow, if ever, to be given back. If the the actual tax return is processed properly and accurately, that questions are asked which are relevant to the taxpayer. If, as we've also heard, that sometimes the taxpayer is actually asked to pay tax earlier than the scheduled time in terms of under the law, and the law is actually adhered to. So a whole number of other things specific to the tax, rather than some of the things like lottery prizes for getting the tax right, or being the first return to go in, or I think it'd be quite useful if people pay earlier, that they're actually given a supplement for paying earlier, or given some sort of interest reimbursement.
Right. One of the interesting areas that you picked up on, Chas, during the conversation with members and employers here was around group VAT returns that are certainly practiced in the UK. Here in Pakistan, we don't have a group VAT registration process in place. Tell us about some of the benefits to group companies or group structures from such a scheme.
I think it's very important to have a group VAT system, because one of the things in Europe is that only about 50% of the European Union members have groups for VAT purposes. What that means is that intergroup transactions, you don't need to pay VAT and then recover the VAT, so a whole lot of transactions happening which are then having to be recorded, which just kind of cancel each other out. But also when you have exempt activities within a group, a company within the group has exempt activities like financial services, then they don't have to worry about the exemption until the very end when the VAT return goes in. Then the group itself puts in a VAT return netting out the exempt activities. So it helps cash flow within the group, and it also shows the tax authorities what the group structure is about, because a part of the VAT grouping would be to show what the group structure is.
The report also gives a brief insight into the appeals process across the jurisdictions. So whilst there are always going to be disagreements between the tax authorities and the taxpayer, it's very important that you have a very efficient appeals process as well. Can you tell us, what an ideal appeals mechanism should be within an indirect tax system?
Well, what we have in the UK and across the European Union is that we have tribunals, we have the court system, and you can take a tax dispute directly there. In the UK, you can actually go to tax authority, HMRC, where you don't agree with a particular ruling, the way that they have treated you for VAT purposes. So they'll independently look at what they've done as a first course of action, which won't cost the taxpayer anything. And after that, you can go to tribunal system, so the lower tribunal and the upper tribunal. Then you can go to appeal at the High Court, then you can go to Supreme Court, and then ultimately you can go to the European Court of Justice. So what we see in the UK is that there's a whole range of processes that you can go through before having to accept a decision by the tax authorities, or for the tax authority to accept the taxpayer's decision. So I think all round you need to have a proper, robust legal framework with an appeal system underlying over that legal framework, to make sure that the taxpayer has confidence in the tax system and the tax authorities themselves act within the law.
Lastly, we heard from a lot of the opinion from the tax authorities as well as practitioners here, that the tax authorities are very much targets driven. So they're pursuing a given target in order to meet a fiscal deficit. Sometimes those targets are midway through the year, whether they're direct taxes or indirect taxes. In your opinion, how detrimental is it to businesses where the authorities are taking this very ad hoc target driven approach to collecting taxes?
It should be about paying the right amount of tax. It shouldn't be about getting in a certain level of tax. It shouldn't be about getting in a certain number of returns. Obviously there's going to be deadlines, so we need to adhere to the deadlines, but it shouldn't be target driven at all within the tax authority, because otherwise it becomes like a sales driven workforce where they need to get a certain level, a certain volume of tax in. It is very much about being within the law and getting it right, rather than being driven by a target which may or may not be realistic.
So countries in South Asia which are in pursuit of really high GDP growth levels in order to really combat poverty and provide economic opportunities to the population. Tax is going to be an increasingly important part of that economic agenda for the South Asian countries. What role do you see accountants playing in terms of the whole ethical approach to compliance? So how are professional accountants, especially ACCA members, really going to ensure that they're working with governments as well as working with clients, to avoid evasion, first of all, because evasion's illegal, it's outside the legal framework, but also increasingly avoidance has to be at an acceptable level. We cannot allow companies, it damages their reputation, but increasingly avoidance is going to be frowned upon as well. So how do ACCA members who are especially involved in providing tax advisory work, how do they operate in such an environment?
I think it's absolutely critical to have an ACCA qualified or qualified accountant dealing with the tax affairs. They are governed by ethical guidance, the 5 fundamental principles as they're known as. Then in addition we have what's called the professional conduct in relation to tax in the UK, which stops or says that the accountant cannot deal with egregious tax avoidance schemes. So that's, even though it's within the law, they shouldn't be doing it purely for tax avoidance purposes. And so there's a big piece of work which is underpinning the way the reputation and the influence that the ACCA member will have around tax and the way they'll operate for both the client and to the tax authority. And so in terms of knowing, most taxes are based on the accounting treatment, and so I think it's absolutely critical that you have an accountant involved, one that's qualified. Part of our syllabus has been tax, part of our syllabus has been corporate reporting. So when you marry the two things together, that brings together the skills, the primary skills you require to have an efficient agent dealing with your tax affairs.
Lastly, in connection with a previous report that ACCA developed and delivered here recently, was around managing late payments. And we've seen, when we're talking about managing VAT or planning for VAT, it's really connected with managing the cash flows. Would you like to give any advice to businesses out there on how they should manage their working capital cycle in terms of collecting debts, managing their creditors? What is the best position to adopt that sits alongside, VAT compliance as well, or GST compliance?
Well, most VAT returns, for example, in the UAE, will need to be sent in every 3 months. So you need to make sure that you actually get the cash in before you pay the cash out to the tax authorities. So it's absolutely critical as a part of your supply chain, both into your organisation and out from your organisation, that you actually bring those down to as short as possible, certainly within the 3 months time frame for filing. So you need to make sure that your suppliers are fully aware that you need the money in. It's not something that they can hang on to for 6 months or 12 months or as long as they want. And it's also good practice for you to make sure you pay the people that you owe money to in a way that will actually allow them to pay up on time, that they actually have the cash to be able to pay the VAT across. So your purchases and your supplies should be managed in a way that's efficient and helps other businesses as well as helps you. So in terms of the whole culture somewhere, such as in Pakistan or UAE or anywhere else, the whole culture will actually help you comply, will help the tax authorities get the tax on time. Because one of the things businesses obviously can't do is if they don't have the cash, they can't pay the tax. And so the whole culture needs to be one of paying on time so that you can actually then deal with the compliance properly.
So the culture has to be one of efficiently managing your working capital cycle, which will ensure that you're complying on time, but also receiving your debts and paying off your creditors on time. So you have to look right across that supply chain. Great, thank you very much, Chas, for visiting Pakistan once again, and I'm sure we'll have you back here before the end of our business year once more. If members out there and other viewers would like to go to the website, you can easily trace it if you go to www.accaglobal.com and then look under Research and Insights. You'll be able to find this particular publication very quickly. Do have a read of it, do give us your feedback, and hopefully we'll develop some more insights for you in the future on these important tax matters.